Hi, good afternoon. How's everybody?
Good
Hello.
afternoon, sir.
Hello,
Hi.
Professor.
Hi. How are you? Give me a few seconds. I'm just setting up my equipment. Let's see. Okay. So, well, I believe everybody has got their homework two back. There are just two homeworks that haven't been graded yet because inevitably they were received late. I mean, and then obviously it cannot be done uh, on time. Um, and then also, and you may have also noticed the file that was posted in the okay, a file that was posted in the assignments folder. Uh, of course, what only after the midterm. I mean, I also posted this after the first homework, after grading the first homework. But where is it? But since we have already, we have done midterm and homework two, so there's basically a comprehensive. Did I already press it? So it's file named, bus210 summer 22 release. It means release of data, right? Release of the results. These are, so these highlighted, the light olive green, those are still, those are pending because um, there were either problems with the file or they were received late. So that was, I think, uh, and then uh, that's the, okay, this is the only way I can. um, I will have to upload this file to my OneDrive, and then I can open it in Microsoft Excel. Otherwise, but you can, if you have Excel, you can easily download and watch what's there.
Yeah,
So you can see,
Professor, I have a question.
yeah, yeah.
I see my name. I mean, my number. I don't see the homework two. I see a zero when I have a grade there. When you sent me a grade of 73 for the homework two.
Okay. Uh, well, if I already sent you back the result, then uh, the
Yeah,
data
but
is there.
the grade isn't
Okay.
there. I see for
Hmm?
73. That's my ID number. I see zero, but I got a 70. I got a 72 on the homework two.
Okay. Then it will be all corrected later because if I have the data, then it's there. Okay, it cannot be. Um, this is not a permanent file because next time, when I get the homework three, then it will be all
Yeah, I just want to
updated.
make sure that my grade is put in because you said
Okay.
that the grade. So
Okay. So
the grade isn't put in for
you
70.
are you are okay. What's your ID? What's your
It's two
student
three
ID?
234666173. The homework one I didn't do well, but the homework two I had a 72.
Okay, just give me last three digits because it's hard to see. Just the last three
One seven
digits.
three.
173.
Mhm.
Okay. All righty. So I'll look into that. Um, I'll look into that. But anyway, I don't have time to because you must have one of these days. I wonder if it was this Monday or last Thursday. Almost 1 hour, I explained uh, how the grading works in my course. Right? I talked about the statistical criteria, et cetera, et cetera. How the IQ test is a matter of scale. I mean, so if you understand understand it, or if you watched, or at least remember watching that uh, part of the lecture, and that live session recording is there, so you can always go back. So then you would understand uh, where you stand. The highest was 57. Then you might, if you're still saying what, then I failed because it's below 60. Then that's just I don't know how else I can help you. If you still believe that is despite 1 hour I dedicated to explaining what is the statistical uh, you know uh, way of looking at it, but despite all that, if you're still saying then it's just a miracle how you could be there, right? um, Someone who doesn't have any uh, statistical concept or the statistical perspective, uh, then that's really and if someone like that got the highest points, then that is something I don't know. Um, it's just a then strictly a pure fluke, right? Otherwise, there's no other explanation for it. But anyway, as you can see, so then think about it. The mean of this distribution of this data sample of data, the mean was 32. What and what does that mean? I told you. I don't want to go. This is something that is expected of an average person with average intellect, right? And then, um, and we haven't. I mean, this is supposed to come to something like this. That summer 2021. This is the result of summer 2021. That's not sure. And then the mean came to 53.65. That is, I've been telling you over and over. That is quite. That is something that is expected of a perfectly unbiased sample, unbiased, right? And this is, of course, after the final, right? After the final. So that's the result of collecting all the data, homework 3, homework 4, homework 5, and the final, and everything. And if the mean came to something like 53, 54, it's quite an unbiased sample. If it is unbiased, that's where the mean should be found. Just like in an unbiased IQ test, and if the IQ score is on a scale of 0 to 100, the average IQ should be found somewhere between 50 and 60, right? Just like that. That's the concept. And I don't want to go over this all over again. Using our precious class time. So if you are, still not sure, if you still understand what I'm talking about, go back to our live session recording. It was either this Monday or last Wednesday or Thursday, right? I almost devoted 1 hour on explaining. Um, okay, I'm sorry. My phone is ringing and it's my doctor. I had some test done, so it must be it's gonna be. I have to take this call because it's gonna. Excuse me a second. Hello. Hello. 예, 잠깐만요. Where is this thing? Okay, I'll hey, okay, that was Tatiana. I saw the hand raised. So Tatiana, you have a question?
Oh no, that was
Hello?
from earlier. Sorry, that was from earlier. I'm sorry.
Okay, that's okay. Okay, thank you. I'm sorry about that. The I have a cold from uh, I had a lobotomy last week, and uh, good thing it's not cancer. It's not a tumor. It's a good thing. Anyway, uh, where was I? So, um, uh, and again, so once I have collected all the data from this semester as well, I would expect it to be the mean of the weighted average to be something like last summer. Class size, think about it. This summer, the class size is like 17. Last summer was 13. But last summer, the mean of the midterm was a little higher, some higher. The thing is, uh, the standard deviation was even wider last summer. Of course, you cannot directly compare the standard deviation because the mean is different. Mean is different. Uh, but this time, and in other words, the dispersion of data. This time it was okay. If you look at the maximum and minimum, maximum and minimum, right? Standard deviation of the mid. Come on, not you cannot compare. Because we are still in progress, and last summer is already completed, so you cannot compare uh, the total weighted average, but we can compare the midterm result. Standard deviation is quite wide this summer. Last summer, standard deviation was smaller, and one of the reasons is that last summer nobody got the lowest score was 3.33, highest was 100. Um, this time, but this can happen. Um, sometimes people submit uh, uh, they submit the exam, but somehow nothing was saved, or the time ran out and it gets automatically submitted without anything being saved. Uh, I've heard some reports from some students saying that they cannot save. Uh, Sometimes there are uh, some glitches. It's not the glitch of the blackboard, but it can happen either because the connection was dropped at your end, or uh, you have opened the exam and then somehow without submitting it, the browser was closed. Either you closed the browser, or automatically the browser was closed, either because there was power outage, or your computer somehow shut down on its own. Then if you try to restart it, then it doesn't allow you to get in, because as far as the Blackboard is concerned, it doesn't know what happened at your end, right? Any sensible adult would understand all these possible situations, right? And then sometimes Blackboard still recognizes that your window is open, that the test is open, you're still working on it, although it was accidentally closed, right? So all of these things. So I had to handle all of these emergencies over the weekend, um, resetting your exam in case these things were happening. Um, so so I looked into this case. So who got zero? I mean, was it because of one of these things, um, browser issue, or like internet connectivity issue? It was accidentally submitted without completing it, without. No, it was actually I looked into that, and it was not. It was all answered. Just all of them are wrong answers. It's not like if you didn't answer it, and if the answers are not saved, then it will say non selected, or you know not answered, or non selected. But it wasn't like that. The answers were selected, or filled in. So uh, but so I feel sorry for that person who got zero on this. But then, as I've been telling you, look, your weighted average doesn't depend on your midterm of alone, or final alone. It is the result of your collective effort. Right? We got two people who got 100, but just because this person got 100, it didn't put this person in the second place. Why? Because it's the result of the collective effort. You understand? And the collective effort also includes, what is this? Participation points. All those participation points that this person earned a participation point, although this person, he or she, got zero in the so so once again, it's the weighted average, right? You understand the meaning of weighted average? There is a weight that is given to each effort, right? And the homeworks take 40%, right? The weight on the homeworks is 40%. Each homework is 8%. So you have to do your best. You have to be dedicated and devoted to every homework and every exam, because that all translates into I mean, who is in the first place? This person, of course, got 100. That did a lot of good, but as far as the homeworks are concerned, not necessarily the best. I mean, some homeworks he or she did well, but some homeworks he or she didn't. But everything counts, right? So think about it. Make your efforts count. Make your efforts count, right? Uh, Even if you didn't do well in the exam, midterm and final is only 20%, 25, 25, right? And then the homeworks, 40%, right? Attendance, it's supposed to be, just 10%, but I told you, it's more than 10%, because of, if it is only attendance and you made full attendance, then that's just 10%. but because of the participation points, it can be more, 20, 30%. If you so so that's how it works. And then again, that you need to have, like the I've been emphasizing this over and over. Systemic structure. You should be like a structural engineer. In other words, that mindset of a structural engineer or an architect. If you're building this model, and what should this model? What is the best way to make this model look the most? The neatest. It should look the most neat and also most efficient and effective, right? Where am I? I have Blackboard open, so and in my comment you will see repeatedly over and over, some people did well in the second homework, because in the first homework you saw a lot of comments in red font in the comment box. That's all about that uniform, integrated uniform systemic structure. And if you took heed or warning from that first homework comments in the first homework, those people did well. And some people who did well in the first homework, and then they were they never got that warning about that systemic structure. So probably in their mind that was not the priority. They probably thought they were doing okay. So in the second homework they completely ruined it. Because of what? Because they just didn't have this structural systemic structure, or like, or the mind of an architect, right? So once again, think about it. It's basically like structural engineering, systems engineer. What kind of structure will be the most efficient, as well as most neat, the neatest structure, and most efficient structure with the minimum redundancy. And I keep emphasizing this reusability. Why are we doing this in Excel? Because so that we can reuse it over and over. But some people still continue to do everything all in non-uniform way. So then where is systemic structure there? There's no system there. There's no uniform system there. You're doing it all, one problem at a time, all in a different way. Obviously, that cannot deserve. It's not the matter of whether you got the answer right or wrong. I've been telling you this over and over. This is not about math. Of course, the math is basically, but solving math using paper and pencil, that's not what we want to do. Some people are still doing it like that. Every problem, they solved it in a different way. Everything was different. Every problem was solved in a different way. There's no point. There's no point in that, right? If you're not using Excel in a structurally efficient and neatest way, uniform and neat and efficient way, then there's no point, right? There's no point. Okay, so so where was I? yesterday. So we were in the financial statement, and um, let me just quick. I think we were talking about the inventory. Why CGS is the why that is at the bottom. Why the order matters. So here, let me just quickly. And please review whatever is still. If you're not, these are already grayed out, so you can't see them. But at least these daily uh, live recordings. Please go back to that. Please go over it. I think on August 4th, I already explained, uh, how the grading is done. Uh, let me just quickly, or if it was probably last week, last Thursday. And some people might think, some people might think that they have to listen through it all. No, if you don't have time, I mean, if you have time, fine. If you don't have time, you can fast forward. Right? Of course, there's no fast forward button, but you can drag that scroll bar, right? Yeah. Error. Okay, so if it is error, I cannot. I'll try this again. Okay. Or you can also, I mean, how you can double the speed, of course, and you can pause and go back to the normal speed at the point where you uh, see. And let's say this is where I want to confirm. This is where I want to go over. Then stop there and pause there, and go back to normal speed. I mean, if you have time, you can play through. Okay, so where's the sound? Where's the audio? What happened? Okay. So I guess. Okay. All right. So we're gonna. Okay. So yesterday we got to the operating income or operating profit, right? Once again, the term operating income um, is commonly used in accounting. But again, I don't prefer the term income being used there. I mean, income, this is where income is, right? This is the stage or the phase, right, of income. The term income should be only used in this phase because it's the gross state of the income, right? Gross state of the income. But after that, think about it. You subtract um, returns and allowances from the income, so you arrive at net revenue. From the net revenue, you subtract, expenses, which is CGS and OPEX, right? Direct and indirect expense. Hence, once you subtract it from the income, it shouldn't be called income anymore because now it is in net stage, right? It is net. When you subtract something, isn't it right? What is net income? Net, you subtracted all whatever needs to be subtracted, right? So even the term net income is not appropriate here. In case of personal finance, then it's fine. But if you are dealing with business, right? The income statement state of business, um, calling it operating income isn't quite appropriate. So I've been telling you, operating profit is a better term, operating profit. And then otherwise, EBIT, right? Now, EBIT or the operating profit is now, according to what we did yesterday, according to all these numbers, it's now negative. So what does that mean? The company is in loss, right? The company is in loss. If the company is in loss, there's no way they can pay interest, right? Obviously, and where does the interest come from? Because the company borrowed money, right? I've been telling you, the huge part of the sunk cost or the initial investment was the loan, isn't that right? The companies, when the company starts out, huge part of its, startup capital comes from the debt. There are only two sources of capital: equity and debt, right? Um, so, and if the total amount of capital this company raised is $10 billion, and if 60% of that came from equity, 6 billion was equity, right? That's the shareholders capital or shareholders capital, right? Shareholders capital. And then still that means 4 billion came from the lenders. That's a huge amount of debt. 60, 40, 60% and 40%. That's called capital structure, right? And I've been telling you over and over. The purpose of the balance sheet is to describe the capital structure, right? So that means capital structure means how much of the total assets came from equity, how much of it came from debt. Now we know that so the company owes interest because they had debt, and the debt is declared, is shown in the there's no scroll bar. I'll have to do this by finger. See, in this example, ignore ignore the actual numbers, but let's say if the total liability total assets was 100 million, right? I just used a while ago 10. I said 10 billion. That was just I just grabbed it out of nowhere, but in our example, also I use this assumption that the total assets was 100 million, and that 100 million came from equity and debt. And the debt was, equity was 60 million. Then the debt was 40 million. Out of 40 million, long-term debt, also called non-current liability, was 30 million. and the working capital or current liability or short-term debt was 10 million. So anyway, that's 40 million. So 40%, 40% debt, 60% equity, right? That makes it. All righty. And and the long-term debt, most of the long-term debt is either mortgage or bonds, long-term bonds, right? Um, so basically, your interest is mainly from these, long-term debt. Of course, short-term debt, you can, have some, interest, but it's relatively short-term, under 1 year. So the interest from the short-term debt would be relatively smaller. Uh, so most of it is from the long-term debt, like bonds and mortgage. And of course, they would all have different interest rates, right? The bonds that you sold had a certain interest rate, whereas the mortgage you from the bank. Why mortgage? Because you are buying plant, you're buying land, you're buying buildings, uh, or the even if you're not buying existing building, uh, but you are then constructing, you are building a new building, still uh, the mortgage, you took out the mortgage for the building that you're going to build. So all of that has interest. And I have assumed, right? So the interest would be different, depending on whether it was bonds or mortgage or for notes payable, right? Notes payable, it could be all different. But the idea is the interest to pay within this year or this quarter. I mean, this is quarterly statement basically. So then, interest is 2.5% a year, right? I mean, all the interest rates are basically, I've been telling you, all the interest rates are expressed as annual rate. Okay. Uh, and this is sort of like weighted average of the interest rates because they are all different. Mortgage interest rate would be different from the bond coupon rate. So um, we'll have to find some weighted average of those rates. So let's say this is the weighted average. And then if it is annual, then this is quarterly statement. Then obviously what you will need to do is first um, uh, will some of these two, right? Okay, I'll point to there's nothing there yet, but it's not difficult to fill this in because it's the sum of these two numbers, right? I'm gonna do that later, but the idea is the interest is basically that is the principal that you have to pay interest on, and you will pay this rate. And of course, we are dealing with quarterly statement. If you are dealing with quarterly statement here, then uh, you'll adjust it by 1/4. Again, I wouldn't normally input a number manually like this. Okay, but I haven't set it up. The current, the way it is currently set up, there was no separate table for quarterly or semi-annual or annual. So just temporarily, I will input I will input it manually like this. But again, if you do it like this, then it's not reusable. You understand? It cannot be reused because what if we are dealing with, annual statement? You cannot do it like this. What if we are dealing with, semi-annual statement? You cannot exactly copy this because then, this part you will have to change it, manually change it, right? Then that's not the thing that is reusable immediately. Um, so again, I don't recommend, in over and over. And even in homework 2, there are still people that, input manually all these. If you input it like that, every time, what's the point of using Excel? Hmm? So again, I strongly, warn against, manually inputting data, numerical data. Uh, in this case, I had to because there was no separate table given there. But if you do that, normally what I'm gonna do is I will have just like this. I will have a separate table for this is interest rate. I will have to put label there, interest rate, or maybe something like R. This computer, or it's because of the using the cloud making changes to the file in the cloud. It's so slow. Come on. Oh no, why? I didn't do that. Okay. And center. Okay, just like this, I would have a separate table for some parameters, and here also, what was I going to do? M, right? I will put M there. You understand what M is, compounding frequency, or frequency per year. So here, if I put it like this, and if it is not quarterly statement, but annual statement, I will just make it 1 there, okay? And then what goes in here in the formula, you don't have to do it like this. We can simply right, divide the whole thing by M. That way, if M changes, compounding the not compounding frequency here, but more like the accounting cycle changes, statement cycle changes to annual, then I just put 1 there, right? Or if it is semi-annual, I just put there, and automatically everything will change. This is what I'm talking about when I when I talk about reusability. You can replicate this over and over under any and then here the thing is it's 0 because nothing was this wasn't found. But if I Now let's find it. It's simple, just using AutoSum. And that's total long-term debt, right? I don't understand why this, all the numbers must be right aligned. It should be right aligned. And dollar sign shouldn't be right. It should be here. That's weird, but that's what the system did. So the minute I found it, right? Uh, Interest is already calculated. So interest has been calculated. But then the problem is, think about it. Uh, our company is in deep trouble. I mean, can we pay interest? No, we cannot pay interest because our EBIT is already negative. There's no way we can pay interest. So what's going to be the fate of this company? The fate of this company, uh, when you cannot pay interest, technically, you are defaulting on interest. So the lenders can do one of the two things. One is Chapter 7 bankruptcy. They can take this case to the bankruptcy court and get a Chapter 7 bankruptcy judgment, and then they can seize hold of all your assets and then sell it off, recover their debt in your company, right? In other words, recover their lending to your company. But again, of course, just because you defaulted just once, they don't do that. I mean, if they just right away, for defaulting on interest just once, if they do it right away, there will be hardly any company that's left on the face of the earth, right? Usually, the companies will, okay, so this time, but all those unpaid interest will be held in arrears, right? It will be held back. So when your EBIT improves, then you have to pay cumulatively, right? You have to pay all the interest that has accumulated, unpaid interest accumulated up to that point. But usually, the company doesn't really, the lenders really don't threaten you with bankruptcy at the first default. They will give you a leeway for a couple of times, but it continues, like 2 quarters, 3 quarters. If this continues, then they will take this seriously, and then still, they will have to, they will have to come discuss this matter with the board of directors, or with the management rather than board of directors, with the management. And that's called, of course, to enforce anything, they will have to get the court's judgment, right? To enforce anything, they have to get the judgment from the court, and then if they take it to the court and get that judgment, that's called, Chapter 11 bankruptcy. And in Chapter 11, they are not going to liquidate all your assets. They are not going to seize all your, physical assets, but they will let you continue, right? But the management will get fired, and there will be a court-appointed management. Court-appointed management will be working in the best interest of the creditors, not for the shareholders, not in the best interest of the shareholders, right? So it's called workout. They work out certain, solution, right? The management and the creditors. Creditors are basically, want to amicably, they want to settle this amicably. And what is the what is amicable settlement? It's like, we'll let you continue, but every profit you make, you will be under the management of our manager. Manager appointed by us. Now think about it. This is unthinkable under normal circumstances. Why? Management is appointed by the shareholders. Management is appointed by the owners. Isn't that right? Management is the job of the, think about it. Owners, why are they owners? Because they can hire management, right? Owners are owners because they can hire whatever management that are pleasing to them. I mean, the best, the best manager that they think will serve the best interest of the owners. Okay, but then think about it. Once they default, right? Once the company default on their debt, then the management, the priority is paying back this debt. Interest owed and principal owed. Paying back this debt is the priority. And then obviously the management, existing management was appointed and hired by the shareholders. So the existing management cannot serve the best interest of the creditors because they were not hired by the creditors. That's why under Chapter 11, the existing management is fired. They get kicked out, and then the court will appoint the management who will serve the best interest, not of the creditors, not the shareholders or the owners. Okay? So because they are not paid, the new management appointed by the court, they're not paid by the shareholders. They are paid, I mean, their salary will depend on, of course, it will be part of the earnings. It will be part of the earnings, but it will be part of the operating expenses. What I'm saying is part of the operating expenses, but that will be that's something approved by the creditors, right? If this is not a manager that is serving the best interest of the creditors, then the creditors won't approve that salary, right? So in other words, once the company is declared bankruptcy, either Chapter 7 or Chapter 11, the owners or the shareholders have no say, no voice, right, in controlling or directing the management, right? It's the creditor has the control over the over the management. So anyway, again, this is the ownership star. This is about the ownership structure. So we'll get to that point later. So under so under workout, in other words, Chapter 11, on the workout, they will be this interest will be passed on. What that means, think about it. It's going to only deepen. Think about it. What is the taxable income? Obviously, taxable, we know it's EBIT. That means from it's EBT. So that means from EBIT you subtract interest. That's EBT. But of course, then that will deepen the loss, right? Because it's already negative. You're subtracting, meaning you're making it more negative. Now this is taxable income. But are you sure is this the right way? First of all, think about it. Numerically, there's nothing wrong with that because you don't have any you have loss already. You have loss. Okay. So EBT will have to be a more negative number, a greater negative number, more negative number. But then can we really put it there? Think about it. Taxable income means literally the income that can be taxed. But when you are already in loss, there's no taxable income. I mean, how can you tax a company that is in loss, right? There's no tax base. There's nothing to levy the tax on. So actually, showing a negative number here is all wrong. You cannot do that. So then what should you do? Oh, so you might say, oh, if it is negative, then we just don't put anything there, just put 0 there. Yes, but you don't do it manually. I've been telling you, the whole point is not doing anything, not inputting anything manually, not inputting any number manually. That's the whole point. So what do? I will do this. There is something called if command, and this comes in very handy, right? And it's just the logic. It's just a logic. So what I do is if, we all know if command, it's a conditional. If something meets this condition, then do this. If it doesn't meet that condition, do something else, right? That's usually, if you see, everywhere you go, I mean, it's basically if condition, isn't that right? If you test it positive, go back. If you test it, you go to the airport. If you test it negative, yes, you can go. You can take the plane. You can go on board. So you pass the gate. But if you test it positive, return. Go back. Go back to testing place, or go back and take whatever take the shot, or cure, and when you test negative again, then come back. I mean, it's a loop, isn't it right? It's a iterative loop. First, if you meet the condition, yes, go there, do this. If not, go back, right? And come back again when you're okay. So exactly the same thing. I mean, that kind of iterative loop, it happens a lot in a lot of situations. So we can apply that logic here, right? So my mouth is getting so dry. So if, what are we going to do? If this number, which is the sum of this and this, or it's not sum actually. I'm sorry. If this minus this, isn't it right? If this minus this, that, in other words, that's EBT, isn't it right? If that is greater than 0, if that is greater than 0, in other words, positive, then show, so the first comma is and, right? And then show that number. If it is positive, show that number. And second comma, otherwise. Second comma means otherwise. If that's not the case, then just show 0. Put 0 there. Now think about it. Logically, isn't that what it is? if you have positive taxable income, that positive number should be put there. Otherwise, so if it is not positive, or that means 0 or negative, then there is nothing to, no taxable income to levy taxes on. Okay, do you follow that logic? If the difference between the two, which is the EBT, if that is positive, we will leave it there. We will show that difference there. Second comma means otherwise, then leave it as 0. Now, what's going to happen? If you hit enter, it's going to automatically pick 0, so there will be nothing, right? But that's what it should be. That's what it should be, isn't it right? When there is no taxable income, and if your company is in loss, there's no taxable income, so it should be 0, right? Again, this is not something that is that you do by visually checking it. I mean, if you visually check and you make that discretionary decision, right? In other words, so it's at your discretion whether you put that 0 there or not. If you but then every time you have to get involved in this, every time you have to input manually 0 there. Or if that thing is negative, then you have to delete it and manually input 0 there, right? If it is positive, then you'll leave it. You leave that result of subtraction. But if it is not positive, then you'll have to manually input, delete that and manually input 0 there. And what a tedious job it is, right? What's the point? The reason we are using Excel, or the reason we are, using AI, is that we don't want to get involved in every minor, logical decision. We leave it to the Excel, we leave it to the computer, we leave it to the AI, and we can focus more on the grand design of everything. Grand design, right? Grand design, not these, menial, straightforward logical process. So that's why we are using this if command, right? With if command, you don't have to intervene every time. You don't have to check, this is positive, so I will leave it there. Or, this is not positive, so I will put 0. No, without you getting involved in, that's all the homework. I was disappointed by a few people, not that many, a couple of people, who completely defy this logical problem. Who completely defy this logic. They were doing, some even did well in the first homework, but now in the second homework, they forgot completely all that, systemic systems, structure, mindset. And then everything was, manually input. I hate to see that manual input. Don't you understand? There shouldn't be any manual input of data. Such a work deserves to be punished, penalized. Why? Because you're not only defying, but defeating everything that I have done so far. You're going back to the caveman's age. You're going back to, I brought you out of that dark age and brought you into the computer age, and then you're just going back to that old, dark age. I took you out of that, dark cave of primitiveness, and brought you into the the bright world of logic, and then suddenly, you all, you went back to that, the cave of, primitive cave of darkness where there is no systems logic or system structure, no uniform, system, no uniform structure. Everything is just a patchwork. Everything is just, random. Everything is just, done in randomness. And then, such a work deserves to be penalized, don't you think? Um, but good thing, I a good thing. The good thing is, I think it was because of the homework 2 preview. People who studied that video, homework 2 a video, preview video, at least their homework were very uniform and following, everything was following uniform structure. Everything was, systemically, uniform and, systematically structured, and so it was a good thing that, homework 2 preview was provided at that point. Uh, Um, but once again, the whole point of doing this, I posted this in the announcements. Uh, the purpose of this course is not doing the math. Of course, math is part of it, but the purpose of this course is doing the coding, right? And coding is inevitably, it has to be logical and systematic, right? And reusable, right? With the neatest and most efficient architectural structure. So please keep remembering. Please remember, it's the systematic structure, right? Um, in coding, right? That matters for this class. Okay. So anyway, so if that is, that way we can take care of the taxable income. And since there is no taxable income, our taxes will be, again, it will be zero, of course, right? Because you will multiply it by 35. That's if that is annual rate. Then of course, quarterly, it should be like this. Okay. In case of taxes, you don't have to adjust it for quarterly, because anyway, whether it is annual or quarterly, it's still 35%, right? I mean, this quarter 35%, next quarter 35%, the whole year is still, some of those 4 quarters will be still 35% of the annual. And if the taxes are, the income will be, the net income will be E minus taxes. Now the thing is, EBT is okay. So we cannot use EBT because it is negative. But if I had, so I will do it straight from this. This minus interest, that will give you, really negative taxable EBT. minus taxes. Of course, there was no tax, right? So no. It should give you, I was pointing to the wrong thing. This minus J25 minus J27. My mouse is sticky, I mean, it's not because my mouse, but the whole thing is, this whole thing is, it's not the file that is, residing in my computer. It's the file that is residing in the cloud. So working on the file that is, opened in the cloud, obviously everything gets to be very slow. Hit enter. Yeah, that is our net income. Of course, our net income would have to be, yeah, this plus this. Think about it. This is already negative, and still, this is plus mean, subtracting from this, but it is only still our obligation, right? It only adds to our EBIT. So we are deep in loss, right? But again, you might wonder why, I mean, isn't there a uh, more, positive or optimistic example? Yes, we can have more positive, in other words, positive profit, But then, if the profit EBIT is positive and EBT is positive, um, uh, I mean, I can still do that using this if band, but then you will not have you will not meet the chance to understand why if command is very handy and uh, essential, right? But this way, you can see why if command is very handy. All right, I think it is, it's 4:21, and it's a good time to take a break. I mean, it's actually past good time, well past good time to take a break. So let's take a 10-minute break and reconvene in about 10 minutes. Okay. All right. Oh, we're back. Hi, hi. How's everybody? Hi, everyone.
Hi, Professor.
Hi.
Hey, Lady Harold. Jesus, I was accidentally powered off. This, um, I accidentally hit the power button, so I was, offline for a while. And to get this, all back up again, it took some time because this computer is very slow. Um, okay, so in where was I? So yes, we got the so basically, we went through everything about the income statement. So now we're going to be moving on to the balance sheet. But to talk about the balance sheet, um, okay, I'll have to. Okay, so I have to pull up this blackboard, whatever they call it, chalkboard or whiteboard. So now, for the balance sheet, the goal or the purpose is to show capital structure. And I already talked about capital structure even a while ago. So basically, um, the balance sheet consists of two sides, right? Asset side and liabilities and equity side. Of course, the asset side, the majority of the asset side consists of the uh, physical assets. Uh, they go by so many names. But before we talk about this, now think about it. If we are starting up a some manufacturing business, let's say it's something like computers or some mobile device or whatever, uh, foundry, chip making, right? In any manufacturing, we already understand we need plant and equipment, isn't that right? Plant and equipment. That's the biggest. That's the biggest thing that is, uh, that defines the manufacturing, right? And together with the plant and equipment, we will need some land and building. I mean, we need, of course, the land means, the land where the plant is built on, the land where the building is built on. If we own the building, if we own the plant, to own the plant and the building, um, we need the land. We need to own the land first because nobody builds a plant or building on a leased land, leased piece. Uh, because if it is leased, when the lease is over, it's not like you can just pack up and move on, right? You have already built plant and building there, so you need to own the land. So think about it. That's the biggest. That's the biggest need. I mean, that's the biggest source, that's the biggest reason you need the capital, right? So suppose all of this is about $90 million. That's actually very small, if you're doing, computer manufacturing. But let's say uh, then 900 million. I mean, whatever. Uh, you need $900 million to $900 million to have plant and equipment and land and building. Okay. So where does that money come from? Where does that capital come from? That you have to only two sources. They have to come from either equity and debt and equity. Now, equity means owner's capital. So when it is just starting up, um, unless you're like already very rich person, very wealthy person, unless you're very wealthy, there's no way you can foot that bill alone. 900 million, you can't. So obviously, you would have to uh, have a group of investors, right? Uh, of course, they are called shareholders, but then think about it. How do you sell stocks? How do you sell stocks before you even have the company? You can't even sell the stocks before you have uh, the plant and equipment. Of course, you can have a company only in name, because at this point you don't have plant and equipment. You are not making anything. It's just uh, a startup with idea that is looking for an angel, right? In other words, looking for a venture capital, someone who will invest. So let's say but you found someone who is willing to invest a venture capital. So then you can, issue stocks, but these stocks are just between you and the venture capital. And the venture capital is also you, part of you, because you mean the owners. Because venture capital uh, uh, received shares, which means ownership, right? Shares of ownership for investing, something like let's say $800 million, because or maybe something like $500 million, or $600 million, let's say. So in terms of capital contribution, they are uh, the bigger owner than you. You contributed probably 1 million, uh, but you are just some guy with bright idea, some guy with brilliant idea and technology, like Steve Jobs, or Sergey Brin, or in the early days of internet. Uh, Obviously, you don't have you can't come up with like 600 million, right? So venture capital uh, invested 600 million. And then again, that's far short of what is needed for building and plant and equipment, right? So uh, again, 600 million came from shareholders or the owners, which is equity, called equity. And the other, you might say 300 million. No, let's say 400. Why? Um, the other 400 million came from lenders or creditors. Once again, for a startup, this is unrealistic. I mean, it's very unrealistic that any startup can find a lender. But we'll just assume that we found the lender. But then the total is you see 400 million plus 600 million. That should be 1 billion, isn't that right? So in other words, total equity and debt is 1 billion. But it's only 900 million here. So what does that mean? The other 100 million is in working capital. Okay? So what is working capital? Now, working capital is also called current assets or short-term assets, right? So, and the other, 900 million is all sunken. That's sunk, literally sunk cost, right? It's sunk into this uh, startup project, right? Plant and equipment, land and building. All 900 billion is sunken. So let's say your plant and equipment, plant is ready now. Plant has been built. Construction took, let's say, 1 year or 2 years. Plant is, and now think about it. Until the plant is built, until the plant is completed, and until you produce the first batch of your products and sell them and generate revenue, until your first round of revenue, until then, how would you operate the company? How would you keep the company going? Obviously, you can keep the company going because you have working capital. With this working capital, you pay the workers until the company generates the first round of revenue, right? You pay the workers, you pay for the raw materials, right? You pay for the cost of capital, etc. You pay for the usage of the capital, right? The cost of capital. Cost of capital is actually, interest you pay for. But anyway, running the equipment, right? The cost that's associated with running the plant and equipment. So this is basically handled by working capital. That's why it's called working capital. Okay, but then the bottom line is then sum of everything in the asset side, which is called total assets, right? Total assets is also 1 billion, right? I cannot write any more here. Total assets, you see, you can tell total assets, right, is 1 billion. Total liabilities and equity, or total debt and equity, is also 1 billion. So both sides balance out, right? Hence it is called balance sheet, because the liability, asset side and liabilities and equity side balance out. Okay. Then we can, so left-hand side of the balance sheet is asset. Left-hand side, it's called assets. Assets break down into physical assets. It goes by many different names, but basically they are all plant and equipment, right? But they are called, physical assets, because literally it's physical, right? Physical or real assets, because they are real, right? Physical thing is real. Something physical is real. Or fixed assets and long-term assets, right? Because they don't expire within 1 year, right? Long-term assets or non-current assets, non-current, as opposed to current assets. Non-current assets, but we all know what they are. They are plant and equipment. If you think about it, manufacturing's physical asset proportion is significant compared to retail. Retail doesn't have that much, physical asset. Um, they don't have plant and equipment, right? All they have, retails have just, store space, which is, mostly leased, right? They don't even own it. You might wonder, what about the merchandise? What about the products that merchandise that they have? Isn't that the physical? No, that's called inventory. Inventory is not part of the physical assets because why? Because they think about it. The nature of inventory is going to be, uh, it's going to be sold. Inventory is there for getting sold. But look, um, so inventory doesn't last more than a year, and it doesn't serve to produce anything, right? But think about it. Physical assets, they are not themselves for sale. They are not themselves for sale. They are literally physical capital. What is capital in economics? Capital is defined as means of production. Isn't that right? Capital by economics definition is means of production. Plant and equipment is means of production. They serve to produce something, whereas your merchandise or the inventory don't serve to produce anything. They are themselves the final goods, final products to be sold, right? So, and dollar value we put there was like 900 million, right? The whole thing is like 900 million. And the other, 900 and 900. And then the rest of it, 100 million, that was, current assets. What are current assets? Also called short-term assets and liquid assets. And so short-term means that they all have a life. Generally, they are easily they can be easily turned into cash, right? They are relatively, high in liquidity, so they can turn into cash easily within 1 year. So, what consists of current assets? First of all, the most liquid assets of all, which is cash and cash equivalent. Now, there's a link in my in the topic 3 folder link about cash equivalent. What is cash? Please watch it. Okay, cash and cash equivalent, and then marketable securities. Marketable securities means stocks and bonds, right? Securities. If you're holding stocks and bonds of Google or Apple, Amazon, a company can hold those stocks, right? Why? Because cash doesn't generate any income, right? Holding cash doesn't generate anything, but stocks and bonds generate investment income. So you wouldn't hold all of those 100 billion in cash. Some of it is held in cash, but some of it is held in stocks and bonds. Stocks and bonds easily turn into cash because you bought it from the financial market, and you can sell in the financial market anytime. And then promissory notes. And accounts receivable. And then inventory. Now I'm going to have to go through all of this, and so I need more space. I ran out of already space. So liabilities and equity, that will have to be done on a separate So basically, what is a promissory note? Promissory note is, literally a promise to pay. It's an IOU. Uh, but why do you have IOU? I mean, why are you holding this? These are promissory notes issued by your clients, issued by your client company. Isn't that right? Um, uh, Promissory notes um, in business to business, right? In B2B, right? Promissory notes are the most uh, commonly used means of payment. And so it's a promise to pay. So it's not cash, but so it's a short-term. It's like a short-term loan. But who's giving the loan? You are giving the loan to uh, uh, your client. It's effectively a loan, right? If if you allow them to defer payment for 1 month, right? If you agree or allow your client, if you agree to defer, allow the client to defer payment for 1 month, right? That is like it's the same thing as giving them a short-term loan for 1 month, isn't it right? Um, so the promissory note is also called commercial paper. It's a promise to pay, uh, but it is used only in business-to-business situation. It's not in B2C generally. I mean, uh, you cannot walk into an Apple store and buy an iPad and try to insist on paying with your promissory note. Why? Because personal promissory note is nothing, right? It has no legal power. I mean, it can stand between individuals. I mean, between your parents and you, between your friends and you, between your siblings and you. Uh, and to make it have legal power, you can notarize, but it doesn't really. I think it is still in the um, even notarized by public notary, right? Notary public. Uh, Still, that such a paper or document uh, has very limited legal power. In other words, they can use it as a evidence for claim in civil court, but that cannot have the power to put someone in jail for not paying, not honoring the promissory note. I don't think it has, that can be used in penal court as the basis for, you know, uh, criminal conviction. But anyway, but B2B promissory note, it has full legal power. I mean, it can obligate uh, the issuer and hold the issuer to even criminal sentence if they default on it. But anyway, the promissory note looks like a check, uh, but the difference is that the promissory note has interest on it and the maturity date on it. It's like it can carry like market interest rate. If the market interest rate is 10%, right? And if it is, for 30 days, 1 month, right? We know um, it's a simple discount, right? Or simple interest and simple discount. If it has 10% interest rate for 1 month, it's going to be 1/12 of 10%. You understand? You will have to pay uh, uh, the issuer will have to pay the face value plus 1/12 of 10%, right? When this becomes mature, right? If the promissory note matures, in other words, at day 30, right? When T is 30, right? Um, so if you think about it, it's a credit sale. Promissory note represents credit sale. But so does the accounts receivable. So then what you might wonder, oh, so then promissory note isn't that also a kind of accounts receivable? Isn't it also accounts receivable? Yes, it's a kind of accounts receivable. Why? You haven't received the payment. You received the promissory note. Yes, you can say it's a payment, but you haven't received the money yet. The money will be due in 30 days in our example. Okay, so in a way you can think of it as accounts receivable. But what's the difference? Accounts receivable is also a credit sale, but whereas the promissory note is the credit sale initiated by the buyer, the, the accounts receivable is the credit sale initiated by the seller, right? What does that mean? Most of the accounts receivable consists of actually invoices. Invoice. What is an invoice? Invoice is basically a proof. It's a document that your buyer owes you money. You ship the good to the buyer, so but you didn't, receive payment right away. But instead, you give them 20 days, 30 days, or 45 days to pay, right? And on the invoice, it says, please pay uh, at site, or uh, please pay uh, within 30 days. At site means, literally upon seeing it, right? Upon sight of that promissory note, invoice, please pay, or within 30 days, please pay within 30 days. But if you pay within 10 days, uh, we'll give you 2% discount or something like that. So accounts receivable consists mostly of these invoices, right? Uh, now, we're almost out of time, so I think we need to continue this tomorrow. Okay, so that's it for today. We'll continue tomorrow, and so I will see you. I will see you tomorrow. Have a great afternoon, everyone. If you want, as I said, as of now, the only office hour open is tomorrow. Today is already booked. Tomorrow, nobody has yet. I don't know. I'll have to check if somebody has sent me an email in the meantime. But as I said, it's always first come, first serve. The first email request for appointment, that will be the one booked for tomorrow. So anyway, so if you have any further questions, please email me. Uh, okay. So have a great great afternoon, everyone. Uh, I see you. Take care, and I will see you tomorrow. Okay.
Thank you, Professor.
All right. You're welcome. I'll stop sharing.